Good afternoon, good morning, or good evening, traders. This is John Howell speaking. Today we are going to view Wesfarmers. That's the code is WES. That is on the Australian stock market. It's one of the top 20 big blue chip companies. So let's get into it. This is a weekly chart. You can see I'm looking at a candlestick chart. And the reason why I'm looking at a candlestick chart right now, I prefer the black open highlight close bars that you would have seen previously. But I'm doing it because I'm going to show you some patterns. Again, another pattern that forms in the market, which you can watch for it. And when they do break, they generally break big, and you can go along with them. So let me show you. Let me show what I'm talking about. This is a weekly chart, okay? Now, remember, support and resistance lines and trend lines are really important to your trading and investing career. It doesn't matter if you're trading for 1 or 2 days or you're investing for a long term. Okay? Let me show you what I mean. This is just some trend lines I've brought up. But look at it here. See all these sections here? Right here? What were they? They were support for this trend line, right? So the trend line went up, there was support. But what is this? What is this right here? Resistance. So even if it's a parallel trend line, you can still have a support come down through here, come back up and support as find resistance. Okay, then it comes back down to find a bit of support and it takes off to the upside. So that's one. Secondly, we can see that all along here and also through here as well had a bit of support, and in most recent times we had a bit of support down here, and you can see the market actually came down below this $34 mark and actually bounced off here and came back up and held it there. Now remember, this is a weekly chart, okay? It's a weekly chart. And I'm only going to deal with the weekly chart today. I don't want to go into the daily chart, but I'm going to show you a few patterns and everything that does form, and you can when you can take advantage of that. Okay. So we found out the overall trend is up. And look at this. Resistance here. What's over here? Came back up, hit it as resistance, and then came back down. So once again, trend lines that happened 2, 3, 4, 5 years ago are still relevant today. Okay, they are still relevant today. Let me just remove this trend line. Now, let me show you another pattern. This is called a triangle pattern. Now, with these triangle patterns, they generally break out. When they start, which is from here through to here, when they start, they generally break out about 75 to 80% when they're through the triangle. So they start here, and when they get through to about 75 to 80% of the triangle, they generally break out. And this is what's happened here. So, and how I actually got that trend line there, let me actually draw it for you so I actually can show you. I got my little trend line tool, and I just went from the low through here. Okay, this was the low point through here. Let me just squeeze it up a bit. Okay, this was the low point through here, and so all it did is just went up through like that. And we can see that line's pretty evident through there. Now, how I got that trend line is, once again, we had a bit of support here, bit of support. It bounced off here. It bounced off here as well. So that's pretty evident in the fact that that's supporting it. Okay, so you must admit, if something breaks past that trend line, it must be pretty strong to the downside. And you just go from the top up here, and you draw your trend line down, and you try to find as many touches here. Got a little peak here, a little peak here. So you generally try to find as many touches as possible to make that line as evident as possible. So we've got a trend line coming up through here. Now let's open this chart up a bit more. And once we can see this triangle pattern starting to form, and see this big day through here. See this actually close below it? If you actually saw that and you were buying this stock, you would not want to be in that stock. You would say, I want to get out of this ASAP, because that is a bearish indication the market's going to come down. Now, once it does do that and it breaks out, remember this is a weekly chart. You can trade off the weekly chart, or you can do a couple of days on a daily chart. But just for example, this is on the weekly chart. When this came out of the week and you were looking at a weekly, you said, okay, now it's closing below it. Where's the likelihood it's going to go to? Same as this. Remember the flag I told you yesterday? The flag projection. The projection as measured from the top to the flag, and then measured from the flag to the upside. This is the other way around. Because of the markets actually came down, we want to measure from the high of this flag, where it actually started, to the low. Okay, just draw a trend line through there. And then what you want to do, you actually want to go to where? Right there. See right there? See where it actually broke out? That's where you want to go. That's exactly where you want to go, where it actually broke out. This day here, and you put your trend line up through to here, and if you don't realize how I've done that, I just grabbed a tool that I got on my software, and if I go down like this, I can grab the exact same line. See the exact same line? And when it breaks out, I just put it up the top here. Okay? And when it breaks out, it's likely to get down to here. And exactly what happened, actually did get down to there. Okay, so this is a triangle pattern that they are evident, and when they do break out, that is a very bearish indication, and hence it actually did come down. We did get a lot of selling power all through here, and did bounce off a bear support, and now it's taken off to the upside. Now, if you just go over to the daily chart, have a look at the daily chart, you'll be able to see something really, really evident. What is that? Now, let's just look at, say, a couple of months. Okay, let's just look at this here. Right now, we are where? If I just draw a trend line, probably around there, okay? What is that? We have a support, 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 support. Now what is this? Now remember, once support is broken, it's likely to become resistance. Fantastic. What is this? If you're buying this stock and you saw this day here, look at it, came down, straight down, and closed below it. Big bearish down day. Sorry, a big red candle closing below it. That would be like an entry signal to go short for me, or to buy a put option for me. And hence, it actually went down. Now, what you can see, this support and resistance line here, okay, support, 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 is likely to come up and find resistance along this trend line now. It came down and shot straight back up. Again, the resistance is likely to form, and it's likely to continue on to the downside. Right now, the sellers are in control. How do we know? Look at this. Lower peaks and lower troughs. Sellers are in control. It's broken support. Now it's come up. It's likely to hit resistance around here and keep falling to the downside. Traders, I keep saying this time and time again, but you see, I have no indicators. I'm just reading the charts. And this alone is the most powerful thing you can do when you're actually studying the charts. If you want to become a successful trader, you must learn how to read charts. You can learn fundamentals, which is good too. You can learn technicals, which is good. You can learn how to use indicators, all that sort of stuff. But if you just know how to use volume and basically a couple of moving averages, and learn how to actually understand how the charts work and how the overall market works, support and resistance trend lines, even history trend lines. What I mean by that is going back 5, 6, 7, 8 years ago to find a trend line that will become evident today. What I mean by evident, if that was a support then, it's going to become a support or resistance now. It just happens time and time again. Don't ask me why. It's just people waiting around those lines. This is John Howe. If you have any questions, please email me at support@tradinginvesting4you. As always, please, I actually ask you, please leave some feedback with this video. I really enjoy your feedback. Again, make sure you join the trend lines. Make sure you're compressing your chart up and try to find as much information out of the chart as you can as possible. Remember those patterns that I showed you? There was a flag yesterday. There was a triangle pattern yesterday. There's a lot of different patterns you can use, different moving averages, and different things you can use on the chart to benefit your trading. My name's John Howe. Take care, and I'll see everyone tomorrow. Make sure you visit tradinginvesting4you.com, where there is loads of free information that is giving away right now. There's weekly wraps on the US and the Australian market. There's newsletters every single week with the must-see information. You get a video 6 days a week, every single week, viewing different stocks on the Australian stock market. So make sure you do yourself a favor, go to tradinginvesting4you.com and start to receive this free information now. Trade in the stock market is risky and can cause substantial financial loss. We do not claim or guarantee your profit from the information provided. The information in these videos is meant for educational purposes only. That being said, I've been trading the market profitably for many years. So please, do your own homework and make sure you look after your current financial situation.